Good afternoon, ladies and gentlemen. On behalf of Mangalore Chemicals and Fertilizers Limited and SKP Securities, it's my pleasure to welcome you to MCFL's Q1 FY24 earnings webinar. We have with us Mr. Nitin Kantak, Whole-time Director, along with Mr. T.M. Muralidharan, Chief Financial Officer, whom most of you have already met in the past. All participant lines have been muted and this webinar is being recorded for compliance reasons. We'll have the opening remarks and a presentation by the management followed by a Q&A session. Thank you, and over to you, Mr. Kantak.
Thank you, Nikhil, for arranging this conference call. Good afternoon, ladies and gentlemen. I'm honored to welcome you all to our investor meet today. It gives me great pleasure to share with you the agriculture scenario, overall business environment, and the financial results of the first quarter of this financial year 23-24. Let us begin by highlighting the current agriculture scenario. The onset of southwest monsoon was delayed by about 10 days, and as of June end, rainfall was slightly below normal in India overall and about 55% below normal in our marketing area. This has improved over the last month, and now we are about 5% surplus rainfall in our marketing area. The reservoir levels in our market were far below long period average, thus impacting sowing of all crops. As of end of June, the crop acreage was just 15% of the Kharif season, against 39% last year. This has now improved to 64%, against 72% last year. Overall business environment was stable. That gave us opportunity to have continuous operations of our plants. The volatility in international prices of fertilizer inputs and finished fertilizers has reduced, and the prices are now stable. All India urea primary sales for the quarter were down 4.1% year-on-year to 8.08 million metric tons. All India DAP primary sales for the quarter were down 10.8% to 2.83 million metric tons. All India NP NPK primary sales for the quarter were up 16.2% to 2.65 million metric tons. And all India MOP primary sales for the quarter were down 22.5% to 2.32 million metric ton. In terms of MCFL operational highlights, during the quarter, we have achieved 2.08 lakh metric ton sales, 34% growth over the last year. Industry urea sales in MCFL market for the quarter were down 7.5% to 20.05 lakh metric ton, whereas MCFL sales increased by 64% to 1.21 lakh metric ton. You could recall that, last year in the first quarter, we had taken shutdown for the EIP project, because of which we could not supply enough urea to the market. This time we were able to operate our plant continuously. As far as DAP is concerned, industry DAP sales for the quarter were down 5.6% to 8.19 lakh metric ton, whereas MCFL DAP sales decreased 29% to about 30,000 tons. This was because of our conscious decision to reduce DAP production imports due to lower contribution. NP NPK industry sales for the quarter increased by 15% to 19.02 lakh metric ton, whereas MCFL NP sales increased 45% to 57,000 metric tons. We have increased our market share of 2020 product from 11% to 25% year-on-year in the Karnataka state, which is our major market. On the plant operations front, both our urea plant and NP DAP plant operated without interruption throughout the quarter. Urea daily production continued at around 1350 tons per day post EIP. We have ramped up our NP/DAP daily production from 900 tons per day to about 1300 tons per day and posted record monthly productions in the months of May, June, as well as July. Moving on to our financial performance for the quarter, I am pleased to announce that we have delivered excellent results. Our revenue for the quarter stood at rupees 965 crores, reflecting a 6% decrease over corresponding period last year. This was due to significant reduction in commodity prices, despite increase in volumes by about 34%. EBITDA for the quarter, after accounting for rupees 29 crore loss of Q4 financial year 23, due to retrospective downward revision in NBS, it stands at rupees 125 crore, an increase of 80% over Q1 FY23. This can be attributed to our strategic initiatives, improved product mix, and efficient cost management. PBT for the quarter is rupees 76 crores, an increase of 105% over Q1 FY23. And our PAT for the quarter also registered a remarkable 130% rise, reaching to rupees 49 crores. These impressive numbers demonstrate the resilience and effectiveness of our business model. I am happy to inform the investors that MCFL board in the last meeting yesterday has approved 300 tons per day sulfuric acid project at a capital investment of INR 240 crores. The project will be completed in 22 months. This will meet our sulfuric acid requirement of the complex and also gives opportunity to integrate this plant with ammonia urea plant to utilize the waste heat stream generated, thereby reducing urea energy further by about 0.25 gigacalorie per metric ton. Looking ahead, we remain optimistic about the future performance of our company. We anticipate continued growth in the agriculture sector, supported by favorable macroeconomic conditions and increasing investment in the rural infrastructure. Our strategic focus area include market expansion, portfolio diversification, and operational efficiency. By harnessing our core strengths and capitalizing on emerging opportunities, we are confident in achieving sustainable growth and creating long-term value for our shareholders. Now, I would like to conclude my opening remarks and hand over to Mr. Muralidharan for a detailed financial presentation, after which the floor will be open for questions. I encourage you to actively participate in this session, as your valuable insights and inquiries are instrumental in shaping our future direction. Thank you.
Thank you, sir, for your introductory remarks.
Friends, give us a moment while Mr. Muralidharan just sets it up for the investor presentation.
I'm just trying to get the shatter screen. Is my screen visible?
Yes, Murali. Perfect.
Good afternoon to all of you. In this presentation, we shall cover the highlights of Q1 FY24 and some past annual performance. As briefed by our CEO and Ward Director, higher daily production rate of 1,350 tons per day of urea is maintained post ammonia energy improvement project. As regards phosphates, 35% higher production between Q1 FY24 and FY23 is achieved.
Can you put it on the slideshow? Because the slides are not moving. Just check.
Let me check, sir. Now it is moving?
No.
Mulin, do you want me to open it at my end?
Yeah, you can do that. Not a problem. Let me de-share it. I'll stop sharing.
Sure. I'll just open it at my end and you can refer to it.
Yeah, no problem. Thank you.
Just give me 1 second, please. Is it visible?
Yeah.
Yes.
The statutory disclaimer.
Yeah, the highlights, which are the highlights. Next page. Let me again start from the beginning. So we are able to maintain the high daily production rate of 1,350 tons per day of urea post commissioning of the ammonia energy improvement project. As regards phosphates, we are able to increase our production by 35% between Q1 FY24 and Q1 FY23. During this quarter, we also imported 109,000 tons of DAP, NPK, and MOP. This entire volume we expect to do the primary sales during the Q2 of current financial year FY24. Next page. Thank you, Navin. MCFL registered a modest decline in revenue of 6% during the quarter compared to the corresponding quarter of FY23. This is primarily on account of reduction in commodity price, despite increase in sales volume of 34%. Coming to EBITDA, there is an increase of 80% for the quarter compared to previous year, despite a one-time write-off we took on account of retrospective application of NBS from 1st January 2023. As regards PBT, we have registered an increase of 105%. As regards PAT, we are able to increase by 113% from 23 crores in FY23 Q1 to 49 crores in Q1 FY24. Now we present the details of production, sales, and revenue. The production and sale of urea is 1.22 lakh metric tons and 1.21 lakh metric tons, respectively, in Q1 FY24, compared to production of 0.73 lakh tons and sale of 0.74 lakh tons in the corresponding quarter of FY23. As regards complex fertilizers, we have sold 0.87 lakh metric tons in current quarter compared to 0.82 lakh metric tons in Q1 FY23. Revenue from operations. As far as revenue from operations, urea business has posted a growth from rupees 431 crores for FY23 Q1 to rupees 531 crores in Q1 FY24 due to increase in volume of 64%. As regards non-urea business, registered a revenue of rupees 429 crores in Q1 FY24 as against 590 crores in Q1 FY23. The reduction is due to commodity price decrease, contraction, despite increase in volume of 6%. We move on next slide. Now we look at the financial position. Net worth has appreciated by rupees 146 crores between June 22 and June 23. The net worth stands at rupees 852 crores end of June 2023. As regards long-term debt, there is an increase of rupees 45 crores in June 23 over June 2022. This is primarily on account of the loan availed for the ammonia energy project, which was commissioned in H1 of FY23. Coming to short-term debt, it is rupees 1,003 crores in June 23 as against 1,212 crores in June 22. The reduction is due to improved liquidity coupled with a decrease in the commodity prices. The short-term surplus was rupees 364 crores at end of Q1 FY24 as against 347 crores at the end of Q1 FY23. This demonstrates that the liquidity in the market in terms of the collection from the market as well as from the subsidy disbursement is systematic and a trend is continuing. Next. There are two types of receivables in our industry. One is market debtors, which we receive from the dealers. Other one is from subsidies due from the Government of India. As regards the dealer outstanding, it is rupees 114 crores at the end of Q1 FY24 as against rupees 92 crores at the end of FY23 Q1. As regards subsidy receivables, rupees 591 crores is outstanding at the end of Q1 FY24 as against rupees 871 crores at the end of Q1 FY23 due to timely disbursement of subsidies. Next slide, please. Let us glance at some annual past performance. The revenue from operations was rupees 3,074 crores in FY2019 as increased to rupees 3,642 crores in FY23. As regards EBITDA, you can see from the levels of rupees 200 crores for FY19, we have been able to maintain the EBITDA during difficult times in the last 3 to 4 years, and we're able to improve it to rupees 340 crores in FY23. While BBT has improved from the levels of 50 crores to rupees 176 crores in FY23 due to two significant events of receipt of natural gas in FY21 and successful commissioning of ammonia energy improvement project in FY23. In respect of PAT, similarly, we are able to improve from rupees 33 crores in FY19 to rupees 135 crores in FY23. The next slide, Naveen. The cash profit has improved from rupees 72 crores in FY19 to rupees 194 crores in FY23. Earnings per share has improved from rupees 3 per share in FY19 to rupees 11 per share in FY23. Coming to receivables, the total receivables have come down from the levels of rupees 1,564 crores in FY19 to the levels of 757 crores, which is almost 50% reduction. This is reflective of the higher subsidies we are able to, the time subsidies we are able to receive, and reduction in the overall receivables, leading to reduction in the finance cost. We shall look at the details of production and sales of urea. We are able to consistently produce to the levels of 3.8 lakh tons per annum, which is our resource capacity. However, the last financial year, FY23, there is a reduction in production due to shutdown for implementation of energy improvement project. The trend in the sales of P&K fertilizers is based on availability and viability in this vertical. Next slide. This is an overview of our marketing territories, location of the plant, products manufactured, the capacities, marketing territories, and the brand. The plant is situated at Mangalore West Coast, opposite Mangalore Port, and our present capacity of urea is 3.8 lakh tons, which is our resource capacity, whereas the capacity of DAP and complex is 2.8 lakh tons per annum. We have taken a lot of initiatives to improve, which was briefed by my CEO in his opening remarks. We are also trading in MOP, DAP, and 1026 based on market opportunities and business viability. We operate in the states of Karnataka, Kerala, Tamil Nadu, Andhra Pradesh, Telangana, Maharashtra. We sell about 77% of our sales in Karnataka, 1% in Kerala, 11% in Tamil Nadu, 7% in Andhra, 1% in Telangana, and 3% Maharashtra. We sell our products under the brand Mangala. Thank you for your time.
Thank you, Murli. Friends, we now open the floor for the Q&A session. So in case anyone has a question, request you to kindly raise your hand. We'll unmute you and take your question. The first question is from Darshita Shah. Darshita, you had a question?
Yeah, am I audible?
Your voice is cracking, maybe network fluctuation.
Is it better now?
Yes, it is. Please go ahead.
Yeah. Yeah, thank you. So could you help us out with the EBITDA per ton for urea, DAP and NPK for the quarter and the base quarter?
I'll take this question, sir. Okay. EBITDA for the quarter for urea is about 6,500 rupees per ton, and DAP is a loss of 1,500 rupees per ton. Due to this, as explained by my CEO, that we decided to focus our production capacities to N20, and for N20, the EBITDA earned for this quarter was 7,000 rupees per ton.
Okay, it was around 7,000 rupees per ton, right?
Yes, yes.
And the same for the base quarter?
What do you mean by base quarter?
First quarter FY23.
Base quarter, yeah, sorry. Base quarter, the urea we earned about 5,000 rupees, and DAP 1,500. In fact, 1,500 profit we made. This year made loss, and N10 we made 7,000 rupees.
Okay.
Same levels. Yeah.
So, the 7,000 rupees EBITDA per ton that we made for NPK, that is after adjusting for the 29 crore retrospective subsidy
Yes.
cut that we took, right?
Yes. Yeah.
Okay. My second question was regarding the channel inventory. How in channel inventory, especially in Karnataka region, given that the imports have increased significantly in the market, and if you could help us understand how it would impact the volume of take in the second quarter.
I can come in, Murli.
Oh, no problem, sir. Thank you, sir.
Yeah, Darshita, thank you for your question. I'm very happy to inform you that we have been able to convert our entire production and whatever imports we did during Q1 to primary sales. No, we have converted entire primary sales, and we have not taken anything in our godowns. We had almost 100% railhead sales. And as far as the pot stocks are concerned, as you are aware, the monsoon was, very scarce in our territory, especially in Karnataka. It was 55% less rainfall as of June end. Despite that, we had handsome POS sales, and the POS stocks as of 30th June was around 73,000 tons of urea. We had around 4,400 tons of DAP. That imported DAP about 3,500 tons, and 2020 around 46,000 tons. That is what? So total about 1,26,875 metric tons POS stocks. POS means what is available with our dealers, retailers. Mm-hmm. So that is quite a good stock position, I would say, considering that, the sowing had still not started and the sowing season was to start.
Right. So that's what I was actually alluding to, that given that, the inventory with the dealers is already high, and the monsoon was impacted in the first quarter. Second quarter, we've had decent monsoon activity. So further in second quarter, can that impact the volume of take is what I was trying to understand, given that the dealers are already sitting with so much inventory, not only for MCFL, but overall from other players as well.
Actually, yes, what you say is correct. It is a challenge because of the delay in the sowing season in our market area, huge stocks are lying with the companies, the retailers, as well as with the dealers. And it is a challenge to convert the past stocks. But things have started improving from the month of July, especially in the second half of July, when the rains have picked up and the sowing season has actually started, I would say. So as far as MCFL is concerned, we still have about 1,70,000 stocks, but that is also because we, as Mr. Muralidharan mentioned earlier, we have imported about 1,10,000 tons of, various materials, DAP, mostly DAP around 66,000 tons and about 33,000 tons of MOP plus 26. So the total, in spite of so much volumes what we have imported, still we have been able to convert a large post stock in the month of July. And we are now with 1,70,000 stock of with the retailers. And as far as the company warehouses are concerned, we have nil stock even as of end of July in our warehouses. And we have got some material, about 20,000 tons at the port, DAP, which will be supplied during this month.
Okay. Thank you so much for the detailed answer.
Thank you.
My third question was regarding the market share increase. We mentioned in the opening remarks that we've seen a market share increase in N20 from 11% to 25% for YOY. How did that happen? If you could throw some light on that.
Yes, please.
Despite, the volume increase was just 6% versus that the market share increase is significant. So if you could help us understand this.
Yeah, thank you, Dashita. See, since last year, our focus product has been 2020, that is N20, because the contributions on DAP had gone down. In fact, we were making losses also on the DAP production. So our focus has increased up to N20. In fact, last year, we produced a record 1,99,000 tons of N20. And we have been promoting our N20 product in the market, and the farmers have taken it very well. There is a good brand value for our product, and we are able to convert it into sales. And that's the reason, we are able to get market share from our competitors.
Okay. Do we also provide more discount? As compared to the as compared to our competitors in order to gain this market share?
No, please.
The MRP would be the same, but the dealer level discount could be.
In fact, our discounts are, reasonable and, almost on par with our competitors. It is not that we are giving more discounts and getting more market share. It is not so. It is whatever discounts we are giving in the market are comparable to our competitors. But in spite of that, we are able to push our sales and get a higher market share.
Okay. That's it. Thank you. And
Thank you.
Just one basic question I had regarding sulfuric acid. From what I understand, we do not manufacture phosphoric acid for our DAP or NPK production. And we plan on increasing our sulfuric acid capacity. Could you help us understand what is the sulfuric acid used for, given that there is no production of phosphoric acid at our plant?
Actually, I'll just inform you, for this 2020 production, normally the sulfuric acid consumption is very high. In fact, the ratio ton per ton is about 0.44 sulfuric acid to N20 production. So, since we have increased our volumes of N20, our requirement of sulfuric acid has substantially gone up. Currently, we are having 100 tons per day sulfuric acid plant. And that is, giving only about 33,000 tons per annum. Whereas our requirement is close to 1,20,000 tons, considering high production levels which we are operating now. And also that 2020 is our major product in our product mix. So considering that actually you require at least 1,20,000 tons of the sulfuric acid. So for which, we are just about 25% or so, capacity we have. So we thought it prudent to go for a new sulfuric acid capacity, and that will be about 300 tons per day, as I mentioned to you. So we will be, in fact, for the year producing around 146,000 tons of sulfuric acid, out of which 120,000 will be used for our various product mix, and about 26,000 will be sold. And we have got a good selling market also in our surrounding areas. And that will be just about 2,000 tons per month, which is very less for us as far as that. So this is our strategy. And the sulfuric acid project is going to give us a very handsome benefit by integrating with our ammonia urea plant, where, the waste stream of almost about 14.5 tons per hour will be utilized in our ammonia plant. And that will further improve our urea energy by about 0.25 gigacalorie per ton.
Okay. The 0.25 Gcal benefit will flow through in FY25, if I'm not wrong, FY26.
Yes. This project, in fact, will be implemented somewhere in May 25. That's what. In fact, we are kick-starting this project somewhere in October after financial closure. We expect financial closure to happen in the next 2 months. And from 1st October, we are going to launch this project. And we expect it to be completed by May 25. During the time, we normally have our ammonia urea shutdowns, where we can hook up this project. The steam integration with the ammonia plant can happen that time.
Okay, got it. Just one last question from my end. We've seen phosphoric acid prices coming down from $930 to $850 now. NBS rates still continue to be high. MRP also continues to be high. Do we expect any kind of MRP reduction happening anytime in the second half of the year, considering that the raw material prices are coming down? I mean, do we see that the government or a government might ask for, we might be reducing the MRP going forward sometime in the second half of the year?
Darshita, a very good question. So to my mind, what we feel is DAP market price of 1,350 tons per day has been there for over a year now. And this has been, well taken by the farmers, So whatever changes which happens in the input prices, that will, reduce to that extent, government will reduce the subsidy. And I don't expect any change in the market price of DAP going forward.
Okay, so we expect that prices to continue to remain at 1,350 rupees per ton. Yes. And whatever changes that might be there would be in the subsidy rates.
Yeah. Yes.
And to supplement, can I add on?
Murli, please come.
Yeah. Darshita, I want to add on to this. See, when the DAP levels, the MRP per bag should have been 1,800 rupees per bag. That levels, but government fixed the price at 1,200 and increased margin to 1,350 per bag. So when that levels, always DAP, the most nutrient fertilizer in the country. So the pricing was very, very, a discounted price. Okay. So now other products were price costlier when DAP was at 1,200 rupees per bag or 1,350 per bag. So now only the correction is happening. Now the other prices, after the reduction in the prices of the phosphoric acid and ammonia, you could see the other NPK products are priced less than 1,350 per bag. So that's the reason the acceptance of the the DAP at this price is very high with farmers, and that's the reason government may not decrease the price further, and they will try to mop up their cost of subsidies. Okay, which was explained by Mr. Kantak. Okay, even the rationale behind this 1,350 will be accepted, and the prices of the other N20 and other 1026 other variants also will be priced less than 1,300, 1,350, okay, which is the current price of MRP of DAP.
Okay, so we believe that NPKs going forward will be priced at lower than that.
It's already lower. It is already lower.
That's right.
It's already lower. Right.
Yes.
Right. Perfect. Okay. Thank you so much for answering all my questions. Thank you.
Thank you, Rashida.
Thank you, Darshita. Hope all your queries have been answered. Friends, anyone with a question, request you to please raise your hand and we'll take it up. Yes, Darshita has spoken for most of the participants, most of the queries answered. Friends, anyone with a question, please let us know. So you've been a veteran in this industry for almost 4 decades now. Anything else that you want to add while some questions line up?
Yeah, actually, we are doing very fine. And of course, the fertilizer industry is also poised for growth because it is expected to be another good crop this year also. So we expect fertilizer demand to go up. In fact, the ministry has been asking us to ramp up our productions and imports. So I think it is very positive for the fertilizer industry.
Friends, anyone with a question, any query, please raise your hands and we'll take it up. Presently, nothing coming up. So what I'm doing is I'll share my email ID on the chat. So in case there are any follow-up questions or queries that participants have, but not coming to mind right now, please feel free to write to me and we'll take them to the management and revert on them. So any closing remarks for this earnings webinar?
Yeah. Thank you, ladies and gentlemen. I would like to express my sincere gratitude to each and every one of you for your participation. And of course, I was a little disappointed that only one person, asked the questions. So nevertheless, your engagement actually demonstrates trust in our company and the value you place in our growth story. I am pleased to have had the opportunity to shed light on the overall business scenario, the agriculture sector's performance, and our exceptional financial results for the quarter. We are firmly committed to executing our strategic roadmap, which is underpinned by innovation, operational excellence, and sustainable practices. As we move forward, we will remain focused on delivering superior results, enhancing customer satisfaction, and creating value for our stakeholders. Your continued support and confidence in our endeavors are critical to our success, and we look forward to partnering with you on this exciting journey. Thank you once again for your time and participation. Have a wonderful evening. Thank you.
On behalf of all of us at SKP, thank you very much, Mr. Kantak and Mr. Muralidharan, for not only sharing and going through the results of the company, but sharing your view on the sector as well. We look forward to hosting you again for the next quarterly results. Thank you and have a wonderful day.
Thank you, Ravin.
Thank you, Ravin.
Thank you, Murli. Bye-bye. Thank you, sir.